To qualify performance for this allocation, click on the spreadsheet link directly above this video. When it's finished downloading, click on Open. Another window may pop up asking for permission to open Microsoft Excel. Click on Yes. Enable editing, which allows you to add and save notes, or experiment with any variation of the allocation. To do this, modify any of the values in cells I-19 through I-42 and instantly review life of program mark-to-market, daily, monthly, and annual performance. If you have any questions, click on my name in the upper left-hand corner. A page will open giving you my current date and time, my hours, and one-click contact links for instant voice and video chats. I've also embedded this video into the spreadsheet, negating the need to have multiple windows open as I walk you through how to read and use it. Let's get started. In cells J19 through J42, you'll find markets, contract sizes, and the ATA model number. By clicking on any model number, a text file opens containing life of program historical data, disclosure of how we're calculating volatility, and the pivot points for that specific model. All trading parameters. This enables you to duplicate any day's volatility calculation. Every day's buy, sell, protective stop, and profit objective for the life of the program. Every trade entry, every offset, every profit or loss, net of all bid-ask spreads and fees. Trade by trade cumulative net performance, and net dollar distance per contract from the previous equity high. If you need assistance with these trade sheets, contact me. For more information on the individual markets and models, use the link in cell D12. Cells I-19 through I-42 disclose the number of contracts traded per market and model in the allocation. K19 through K42, net profit per market, model, and number of contracts traded. L19 through L42, active margin requirement per market, model, and total number of contracts traded. N19 through N42, net profit or loss over the last 12 months for that market, model, and number of contracts traded. P19 through P42, highest high to lowest low drawdown, marked to the market daily for that model, market, and number of contracts traded. Q19 through Q42, links to contract specifications and current margin requirements. H20, the allocation's cumulative net profit, never adding positions and withdrawing all net profits annually. H22, maximum drawdown measured from the highest high to lowest low, marked to the market daily. Columns B through E, starting with line 56, life of allocation, marked to the market, daily performance. Columns F through L, starting with line 56, life of allocation, monthly and annual performance. Columns Q through CJ, starting with line 56, monthly and annual performance by active market, model, and number of contracts traded. Columns DL through EP, starting with line 56, active marked to the market monthly performance summary by market, model, and number of contracts traded. Columns FJ through MM, marked to the market daily performance summary by market, model, and number of contracts traded. If you'd like to modify the markets and number of contracts traded in any allocation, you can add or delete any number of contracts in cells I-19 through I-42. All performance will instantly change to reflect your allocation modifications, including the charts at the top showing net profit per unit, net profit per individual market and model, the allocation's net monthly profit or loss. This is how easy it is to modify any allocation trading any number of contracts in any market and ATA model, and instantly review daily, monthly, and annual performance. Let's start by adding 2 contracts of S&P Model 9, 2 contracts NASDAQ 12, 3 contracts Dow Jones 1, 3 gold 1004, 2 silver, 1004. 3 silver, 2005. 2 copper, 1001. 1 copper, 2001. 3 crude oil, 1009. 3 gasoline, 5. 0.7 of a Bitcoin, trading model 9. 5 Japanese yen, trading model 105. 4 Swiss franc, model 4. 2 Eurodollar 10. 2 Eurodollar 7. And 3 Canadian dollar, model 1. All charts instantly update as you modify the allocation. Same with the cumulative net profit and drawdown, as well as the daily, monthly, and annual mark-to-market performance. One of the features my clients really like about this program is they can put any allocation they create on autopilot and change it at any time. For a video on how this works, open the link in cell B11. More importantly, they can define the overall account risk in writing before the first trade goes on. For a video on how this works, open the link in cell B12. Let's dig a little deeper into the numbers on this spreadsheet to better prepare you for the risk and reward of participating in this program. Cells H19 through H30. H19, starting balance. You can modify this to any amount, and the values on the spreadsheet will instantly reflect any changes you make. This will help you determine the leverage you want to use for your account. H20, cumulative net profit for the allocation, never adding additional positions, in other words pyramiding, and withdrawing all net gains annually. H22, the allocation's highest high to lowest low maximum drawdown, marked to the market daily. H23, year, month, and day of the maximum drawdown for the allocation. H27, risk-reward ratio, qualified by the allocation's life of contract cumulative net profit divided by the highest high to lowest low mark-to-market daily maximum drawdown. H28, life of allocation average annual gain. H30, maximum drawdown as a percentage of start equity. H33, current exchange margin requirement for the allocation. H34, risk tolerance. This is probably the most important number on this entire spreadsheet. Being able to deal with the allocation's disclosed risk tolerance is one of the most important factors that can decide success or failure. How we calculate the risk tolerance level is taking the previous maximum drawdown in cell H22, then multiply it by 175%. Why? With contract valuations doubling in many of the markets we trade over the last 6 years, to assume that profit and drawdown cycles won't get larger is delusional. They will. And you being adequately prepared, both financially and emotionally, for these inevitable drawdowns is just as important as my team's responsibility to maintain absolute and error-free trading discipline. If you're unable to comfortably deal with the disclosed risk tolerance in cell H34, you might consider one of the 50 alternate allocations linked in cell D11 or linked in cell D13 are summaries for the top 100,000 allocations trading a maximum of 1 contract per market. Linked in D14, summaries for the top 200,000 allocations trading multiple contracts with smaller contract valuations. Or if you're looking for a strategy where risk is absolutely defined on every trade and for the duration of every trading period, regardless of market volatility, see the strategy outlined on link 8 of the main menu. We trade this for our customers in everything from Bitcoin to zinc. Once you've decided on an allocation or trading strategy, capitalizing it responsibly is essential to being successful. How we calculate the minimum start balance in cell H32 is taking the total margin requirement for the allocation in cell H33, then adding the disclosed risk tolerance in H34, which gives us the minimum start balance shown in cell H32. For my own account, I always added an additional 10%, so I don't have to deal with any issues if the exchange raises margin requirements. To experiment with varying start balances, enter any amount in cell H19. Once I've decided on an allocation and capitalized the account responsibly, I define my maximum risk for the account in writing before the first trade goes on. For more information on setting a risk tolerance level for any account trading any ATA, open the link in cell B12. Should any of the models become problematic, we have the ability to identify the problem and implement a solution within 24 hours. We're going to need to do this in 2 or 3 out of the 24 models annually. Bitcoin was a perfect example. With its valuation exploding higher, its trading parameters are going to need to be monitored. Fortunately, all VBO models work off a percentage of volatility, so changes rarely need to be made. How we identify problems and provide timely solutions is using our proprietary software, which employs intelligent algorithms. This software required over a decade to develop, 18 prototypes, millions of dollars, and more than one healthy character builder to get it to perform in and out of sample on multiple related and unrelated markets. Each market and contract size traded has 4,800 execution files. Each execution file can run 20 or more years of data using any time period from 1-minute bars to monthly. In this example, we're using 1,500 trading days of 5-minute bars and running more than 31 billion possible combinations of the objective trading parameters. And this 31 billion possible combinations is just one of the 4,800 execution files. Because of the algorithms, each of the 4,800 files takes an average of only 10 seconds to run, requiring an average of only 3,213 loops, which is a speed-up factor versus an exhaustive enumeration of 9,697,841 to 1. In other words, what takes our software 10 seconds to run would require traditional software on the same computer doing an exhaustive enumeration 112 days to run. To run all 4,800 files using our software, it requires 13.33 hours. To do an exhaustive enumeration on the same computer, it would require 1,476 years. Each of the 4,800 runs sorts results by performance, logs the parameter settings, then runs these parameters on related and unrelated markets out of sample. The end result is we get the parameters that have the highest profitability, highest risk reward, and greatest durability on the out-of-sample data. The whole process to do one market from start to finish can be accomplished in less than 24 hours. I hope you can appreciate the amount of work that went into this program. The fact that we provide potential clients with full disclosure of trading methodology, provide all historical data for objective performance verification, and the exact trade entries and liquidation levels before trades occur. And the fact that we base compensation on 5% to 12.5% of net new high profits quarterly. As independent advisors, we hold no customer funds, nor do we work exclusively with one brokerage firm. When clients open a segregated account with an approved brokerage firm of their choice, where their money is guaranteed plus or minus trading activity, and this is going to depend on regulatory jurisdiction and financial suitability, we get limited trading authorization to place orders. Our incentive fee is billed quarterly, which you must approve prior to it being deducted from your account. Finally, you can change your allocation at any time, or liquidate your account in portion or all in any major currency in 2 to 48 hours. For a video that explains our fee structure, see link 12 on the main menu. Link 1.2, to track monthly and annual performance, trading all 24 models marked to the market daily. Link 1.3, Mark to the market life of program daily performance by market and model. Mark to the market daily life of program cumulative performance, current, and maximum drawdown trading one contract in all 24 markets and models. Link 1.5, current top 50 active allocations, including daily, monthly, and annual performance. Minimums 25,000 to 500,000 US dollars or major currency equivalent. 1.6, summaries for the top 100,000 allocations trading a maximum of one contract per market. These Excel spreadsheets show life of program cumulative net performance for that specific allocation. Maximum drawdown measured from highest high to lowest low, marked to the market daily. Reward risk calculated by taking the cumulative life of program net profit divided by the maximum drawdown. Current total margin requirement for that specific allocation plus maximum drawdown. Markets and models traded in the allocation, enabling you to enter them into any spreadsheet and review daily, monthly, and annual performance. 1.7, top 200,000 allocations trading multiple contracts with lower valuations and margin requirements. In other words, micro and mini contracts. This spreadsheet is set up the same way and provides the same information trading multiple contracts with lower valuations. 1.8, how to create your own allocation and immediately review daily, monthly, and annual performance. For more on what my team does and how it works, see links 3 and 4. To learn how to define your overall account risk for any allocation before the first trade goes on, see link 5. Our fee structure is explained on link 6. How balances are guaranteed plus or minus trading activity, link 7. Link 8, how to open an account. 9, links to hundreds of educational videos and resources. If you have any questions or would like to do an online review, I still enjoy speaking with my clients and potential clients. To contact me directly, see link 2 of the main menu. A page will open giving you my current date and time, my work schedule, one-click contact links for instant voice or video chats. Off hours, email or message me. My team will get back to you with the answers you need, along with links for additional information and/or verification.